Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about risk and reward, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Coach's education platform. Enjoy guys.
Hey Ernie, I have
Hi.
a trading question. I think it was a while back you had accidentally fat fingered, or instead of a out of the money butterfly, one of your wings was a broken wing.
That happens more
On the
often than I'd like to admit.
No, but what I'm saying is on the call wings it was broken, and so to the upside, if it blew past your profit tent, you were still making money on the upside.
Yeah.
So I
Yeah.
got to thinking, that accident might be something that might be a good thing, because in history, like a lot of accident has happened like that, and something good came out of it. So I was thinking, what if some of our strategy, we accidentally do the broken wing on the upside to the upside limit because we're in such a bull market, yet still get that risk to reward profile?
That
Your
would
thoughts on
mean you'd
that?
have to push it further out, but then the upside part would be minimal. It all comes down to your risk to reward, and then also the realization that the moves that tend to move through the profit tent to the other side of the fly based on the risk to rewards that we normally take are very low probability. They're under 1%. So to develop a strategy and compromise your overall risk to reward and win rate for a 1% opportunity doesn't seem to make a lot of sense.
Okay, then what if we lower our risk to reward from 1 to 9 to whatever?
Then you have to figure out, then that changes the whole dynamics of the trade, right? You're going to be, in general, going after a smaller piece of the pie for a higher frequency of wins.
Because right now, if we do the 10% of the width, it's a 1 to 9, right?
Right. So the
then if we-
volatility of your returns are going to increase, but maybe your win rate will increase a little bit, but will your overall returns increase as well? Probably not. I'm pretty sure that not is the right word, but it's not deterministic. But what will happen definitely is the volatility of your returns will get bigger because the risk that you're taking is getting bigger. Therefore, the size and magnitude of the peaks and troughs and losses to wins will be much bigger as you go into a lower risk to reward. Remember, I said it in the beginning, our number one goal is to minimize that, is to minimize the volatility of your returns.
Gotcha. Okay. 1% of your available trading size.
That's like a rule of thumb. Sure.
Okay.
I generally trade, depending on the size of your account, it can be that or a little bit above or a little bit below, more likely to the lower side. I generally trade much smaller than that. My goal is really not a 10% drawdown, which is what 1% is predicated off of, but mine is a 6% drawdown. So for me, it's 0.6% is my maximum trade size.
How often do you go into a trade a day more than once? Like,
about 30 to 50% of the time, which is about right, meaning I take about 350 trades a year. There's 220 trading days in a year. The trade log that I had here is a good example. This was over a period of about a year and a half, and it was about 458 trades.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.